Coming to you this week with the Masterclass and what it takes to actually become a profitable trader. We talk about a few tips in this Masterclass here. These are packed with interviews I've done in the past of traders who've been achieving big things. One of them built up a $3 million account at 23 years old. Another one's been trading for 25 years on the floors back in the day and also now having a good career as a trader. And the last person to understand what it takes to actually be in the top 5% of the best traders in the world. In this Masterclass today, we talk about risk management, how to take the right approach to scale up your account, how to shift the focus from reward to risks, which is going to be a lot more effective in the long term, and some really other cool tips. So make sure you stay tuned for this one. Make sure you watch it and take notes, or go through this while you trade, while you do your watch list for the weekend, or as you get ready to prepare yourself for the trading day. As always, we'll dive right in. I'll catch you back here at the end.
There was a lot of luck. Luck was a big part of it. There would have been right place, right time, right people to learn from. That's often what I mean by luck. There would have been elements of how you are as an individual. So I suppose we could say that, not ironically, a lot of the people who are kind of crazy risk takers, too risk tolerant, not all of them, but many of them fell on their own sword because, they were just taking too much risk and would get taken out of the market. Some learnt from that and came back and started again. Other people managed to survive. There was a lot of fat in the market in those days. There was a lot of money to be made. You didn't have to be particularly skilled to at least survive. And then you had time to go through the learning experiences. And I think the learning experiences, the learning part of it is so important because it's a multi-year learning game to become good at this and to become excellent at it. A lot of people just don't survive or don't manage to sustain themselves during that multi-year learning period. And it is that which leads to a lot of people. We use the word failure, but I would say it's not even failure, it's just attrition. A lot of people suffer attrition during the early days because they just, they're not, it's almost like a bit of a loop. You're not good enough to make a lot of money, and you need to be making money to survive, to live off, to continue doing this, to tell yourself that you're good enough to do it. It is a little bit of a sort of luck does play a part in it, that you can survive that. Do you know what? It wasn't really a discussion, but I think it was it was something that everyone dealt with themselves. The job, this job by nature, dealing with markets, dealing with uncertainty, dealing with unexpected moves, it's something that freaks you out a lot of the time. And we all have to manage ourselves through that. The first month that I ever ran risk, and I wasn't trading equities, I was trading interest rate products, bonds and foreign exchange. But the first month that I traded was October 1987. That was when I was given my first book. And in that same month, the US stock market had a 50% crash in one day. And that created, it was a huge liquidity event. It created waves everywhere. It affected every market. It's a famous story. It goes down in folklore, that story. And experiencing something like that at the very beginning immediately wakes you up to the mental challenge of this job. How do I cope with this? How do I survive it? Almost becomes the first question. And then how do I thrive in it? Until then, there was never really a focus on getting the mentality right. But it was, you just have to perform, and that was it. And I think it's the same evolution that we've gone through in performance in other areas, such as, sport, music, acting. People learnt to be actors. People learnt to be sportsmen and athletes and sportswomen. People learnt to be musicians and singers. Now they learn so much more about the mental side of this. How can you perform at your best? How can you stay sane? How can you remain above the fray? How can you not get taken down by the psychological challenges of this job? How can you not panic and lose it when you're meant to perform? All those sort of things. There's a greater understanding of it, but there wasn't really a discussion of these things going on at the time. I suppose the motivation came from a conversation I had with my former coach. I was at a sort of crossroads in my career. I'd been trading really well. In fact, I'd been trading the best I'd ever been trading. And I was looking at new opportunities. It was just after the financial crisis, the global financial crisis. The bank I was at had been sold to another bank. They didn't retain the prop trading aspects, which I was part of when that happened. So I was looking at different offers, new opportunities. I was weighing up certain job offers that I had that I wasn't particularly sure I wanted. I had a desire to take what I was doing into the hedge fund world. But after the financial crisis, there weren't a lot of opportunities there because they'd been hammered quite a bit as well. And I was in a conversation with my former coach, and he just said, "Have you ever thought about becoming a coach, coaching traders yourself, based on what you know?" And when he said that, I was like, there wasn't even a doubt. I just decided that was what I wanted to do. Now, there is some context there. 10 years earlier, I started working with him. Now, at that point, I was 13 years into my trading career. And I sort of can really divide my trading career into two halves. The half before coaching, when I was someone who thought I knew what I was doing, who was reasonably good, who had some successes, but, was probably at that point in my career struggling and not doing well at all and lost confidence, to the part after coaching, the 10 years after coaching, where I traded far better, far more successfully, with far greater confidence, took far more risk, was far more comfortable sitting with risk, and was far more successful. And there's a very clear delineation that was working with that coach had a huge impact on me and really changed the trajectory of my performance. I may even have given up trading by that point. I was even, considering alternative careers when I started working with a coach. So when he, after experiencing that, made that suggestion, it was like, that's what I want to do. I thought I could carry on trading on the side whilst doing it, but I sort of gave that up after a short time because, it wasn't possible to do it as a side hustle. And I decided this was the direction I wanted to go in.
What did that coach do with you that you think made a difference?
Made me more self-aware. That was it. Made me more aware of who I was, of how I was doing the job, of my situation and context when doing it. There's something which happened earlier this year, which really threw it into. I've thought about it for many years, but really threw it into a very strong light. I was having a conversation with the CEO of one of the firms where I coach their traders, and we were discussing. He asked me a similar question to the question you just asked, and one of the things I said to him was, one of the ironies, one of the paradoxes of all of this is that although I traded much better, enjoyed it a lot more, was a lot more confident in the latter years, it was also more stressful because I was engaging with risk far more. And you're always going to be stressed when engaging with risk, when engaging with uncertainty. And it was one of the things I always struggled with, the idea that I was performing a lot better, I was taking a lot more risk, and yet I was a lot more stressed when, you might have thought, well, I was less stressed. But he said to me, look, it was the fact that you were taking more risk and engaging with more uncertainty, which upped your stress levels, but you could live with that. And that was the big thing that came out of that coaching. I understood a lot more what I was going to do or what I was doing. And there was a second element. I don't think I was really a risk taker before the coaching. After the coaching, I became a risk taker, and risk taking is stressful. And what I mean by that is I over-relied on analysis up till that point. And I think of myself now as, for the first 13 years of my career, as someone who really was maybe more of an analyst who traded. And then after that coaching, I was a risk taker who used analysis to help me take and manage my risks and understand the market. But it was just a tool. So at that point, mid-career, I became a risk taker, and that changed everything for me. Let's start with this thing about becoming a risk taker. When we learn trading, okay, so if I started now, if I'd never traded in my life, I'd probably think it's a puzzle that I need to solve. Okay, I need to find a way to identify opportunities in the market. That would probably be done with analysis, following the market, understanding the narratives, understanding what's driving price, and then finding a system that identifies favourable setups, and then trying to apply that system whilst following the price in the market. And assuming that system, without any proof, but probably assuming that system or method or approach generates a return over time. That is what I would imagine I would do. And I sort of did a form of that when I got into the job, and I kept following that sort of pattern. But you don't really understand what the job is, because the job is about you, it's within you. Okay, it's not what you do with the market. There's two elements. What I'm just describing there is the transactional aspects. And we just think about that. I would not be thinking about myself. How do I make myself better? How do I become better at what I do? How do I develop myself so I do those things better? And how do I understand the interconnectivity between who I am, the person doing those things, and the actual doing of those things in the market? So I should imagine that I probably would not be thinking about working on myself. And that was what happened in my own trading. I didn't work on myself. I knew the psychology was important. I actually read books on psychology, and I was always interested in it. But I took an academic interest in it rather than a personal interest in it, rather than thinking it's me who needs the work, but rather than thinking I just need to understand it, and if I do that, then I can work better. And I think this is part of the challenge of doing this job on your own, alone, at home. Everyone thinks it's the transactional elements of the job. I just need to find value. I just need to identify setups. I just need to place them. I just need to follow the market. I just need to follow the news, the data, maybe construct a system, and the results will follow. But we know it's not. It's a performance activity. It's a lot more challenging than that. They can read my book for a start. So it's called Mastering the Mental Game of Trading. I talk about these sort of things a lot in the book. And part of the problem with the idea of discipline is discipline is just a symptom. That's all it is. It's a symptom of something that goes much deeper. Okay? It's the part we see. We think, God, I should have done that, right? Should have done that, or why didn't I do more, or why didn't I do that, or et cetera, et cetera, et cetera. The problem is that there's usually a lot going on below the surface, a lot going on deeper. The issues that lead to ill discipline or a lack of discipline are way below the surface. Think of an iceberg analogy. You only see 10% of the iceberg, 90% of the iceberg is below the water. With behavior, with psychology, we only see the outcomes of what's happening below the surface. And we give them labels. We call them indiscipline. We call it FOMO. We call it impatience. We call it perfectionism. But actually, there's a lack of a true understanding of what's really happening both within your process, both with the realities of the uncertainty of the market, the realities of how we cope with uncertainty. Misunderstandings in our system or method, where we're using a system or method, or we're taking trades which we shouldn't be. They're not made for us. They're made by somebody else. They fit somebody else. We haven't evolved our own approach, which suits us and aligns with who we are. We might be using too much capital. We might be putting too much money on it. We want to be, for a lot of people, they want their Lamborghini at the end of their first year. They don't want to wait 20 years to get a Lamborghini, which is the reality if they ever get one at all. If they're going to get one, it's probably luck. You know, they probably put on a big trade. You know, they've gone to the casino. For a lot of people who make money quickly, they go to the casino, they make a lot of money. You know, they put on some lucky bets, they work out, and then the Lamborghini goes back, the money disappears, because luck is not a companion to rely on to succeed in this role. That's why, you know, a lot of people are getting into trading early, they get into a wave, they get into something which is fashionable, popular, making money at that point. Quite often that's how people start. You know, when I started trading, I would say my initial interest was because everyone was talking about penny shares, penny stocks. That was the big thing in the mid-1980s. Everyone was talking about it. It was the crypto of its day, or it was the small caps of its day, or it was the Tesla of its day. You know, everyone heard a story of someone who bought a penny stock and, you know, the next year they were a multi-millionaire, and, you know, those stories become legendary. They get passed around in the media, social media these days, but the media in those days. You hear about it from someone else, you know, I want to do that, I want a bit of that. And for a while it works. You know, we saw that in 2020. You know, there was a huge amount of liquidity went into the market because of COVID and the COVID measures, which caused a huge, you know, rally up in many, you know, sort of small cap stocks and in crypto coins as well. You know, we saw the meme stock sort of craze. And you didn't need to be skilled or have any ability to make a lot of money there. You just had to buy it and buy and hold at the time for a while. These crazes have been going back. That's human nature. You know, this has been going back centuries. You know, you got the tulips in Amsterdam in the sort of 17th century, the tulip craze, the South Sea bubble, and they keep happening. And a lot of people make a lot of money jumping on those, and they usually end up getting ruined by those. That is not trading. That's just buying a lottery ticket, jumping on a craze. But it does suck a lot of people in. Most people don't learn to trade. This is my point. They want the instant hit, the instant win. They're not willing to go through that learning process. Whenever you meet really successful traders, they've been through the learning process. They may have got sucked in initially by one of those phases, one of those crazes. They may have initially made a lot of money. Then they saw it all disappear. And then they'll say, okay, that hurt, that was painful, but I've got to find out. I do love this, and I've got to find out how to do it properly. And then they spend quite a few years learning and building up and indulging in their passion. It's very hard to figure it out for yourself. You know, the greatest thing you could have is a mentor or mentors. Okay, nearly every successful trader I've ever met or I've ever coached, and I do engage in these very in-depth conversations with people, they usually have a mentor. Now, that mentor may not be someone they even know. It could be someone whose book they read or who they followed online. They often have multiple mentors. They may not even be from trading. Okay, but they inspire them and they follow them, and they realize that they can take bits from them. But you need to look at what other people are doing. And there's many great books out there written by successful traders. You know, there's the Market Wizard series of books. There's the books by Mark Douglas. You know, there's books written by great traders like Mark Minervini. You know, if you read that and you decide you want to adopt his style, there's a lot of information there about risk sizing, position sizing, how to do it properly, risk management. You know, so same in the Mark Douglas books. You know, these are people who have done it and made money, and they're telling you about it. Okay, you don't need to adopt their way, because you might find a slightly different way of doing it. There's lots of different styles of trading. There's lots of different categories of trading. You know, if you do go into some way of growing your capital that's successful, you're not doing anything new. You're doing something that's been done before, but you have probably taken bits from other people, things you've learned, things you've read about. Yeah, well, again, there's a lot of trial and error goes on. You know, some people are great scalpers. They're made for scalping. Their personality style suits that. Other people are not made for it. I run, when I coach people, I run personality psychometric profiles. And whilst I believe anyone can be successful at trading, you have to work in a way which suits your personality and aligns with who you are. There's a certain group of people that I meet that are incredible scalpers. They've got the personality style for it. They're highly intuitive individuals. They're great at pattern recognition. That they almost seem to know what's happening before it happens. They jump on the market, they get in and out. They also respect rules of mismanagement, things such as that. They're not going to put on crazy risks. I had some clients that featured in Jack Schwager's last book, Unknown Market Wizards. And some of them were the most incredible scalpers, but they did an awful lot of work behind it. They weren't just in and out all day long multiple times. They waited for their moments. You probably wouldn't even call them scalpers, but it would be a description of at least one of their style. And they learned from great people. They went through a development program at a prop firm. They honed in their technique, and then they pushed it out. They had failures. They lost money at the beginning. They blew up or nearly blew up several times. They learned from those. They listened to other people. And over time, they started to develop a style. Another one who learned at the same time, who was also featured in that book, Market Wizards, started off as a scalping style because that was what they wanted them to do at that prop firm. But he started to go further down the curve, take positions, hold stuff for longer. Still would scalp sometimes, okay, but generally form views on the market, built up risk positions and ran longer term risks in many different markets. So, there's a multitude of different styles. Someone I'm working with who I'm coaching later on today, who's someone who I've worked with for a few years now, incredible prop trader, started out doing this job, spent 3-4 years learning how to do it, didn't really make an awful lot of money, then, started to find a path forwards. And, his first big profitable year, he earned 6 figures. His next big profitable year, he earned 7 figures. His next big profitable year, he actually earned 8 figures. This didn't happen overnight. This is a great example of a story. It didn't happen overnight, and he got mentored by other people. He learnt from others. He built his confidence in himself and his style and his approach. There was a lot of luck because the big 8-figure year and the big 7-figure year were 2021 and 2022, insane years in the markets. There was stuff going on everywhere. There was incredible volatility, and it just worked for him. The subsequent year wasn't so great because that level of volatility which he needs for his style wasn't there. It didn't mean he became a bad trader. Sometimes you need the markets to work for you to suit your style. So you can be an amazing trader and not even make any money in a year because the markets are not working for your style. This is one of the things that people also need to learn about this job. It's not a job where you're always going to generate an income. You're going to generate incomes when the conditions are right, but you also have to be a good trader, means surviving when it's not right, not giving back your profits, staying above headwater. A lot of people think trading's just about making money. It's not, it's also about survival. That's why the risk management part is so important.
The last few years have been really an interesting time for me. I feel like I've matured a lot as a trader. There's this phase that everybody is sort of working on. Most listeners will probably be in like the early phases of their trading journey, like trying to figure out how to find the right strategy for themselves and that point. And then you get to this point where once you get to the break-even stage, you're working through that. You're trying to find profitability. Then you get profitable, and then there's like the following time, like the years after, where you are like slowly refining your process further. Like you're trying to figure out how to get better each day and learn something new. And for me, that has been really my goal in the last few years, slowly trying to incorporate new strategies or new ways to look at the market, or at least reduce risk and maximize returns. So yeah, it's been the last few years has been a lot of growing as a trader, maturing as a trader. I feel like I've been profitable for a number of years now, but it's just kind of a never-ending learning journey. And what I've learned at the end of the last few years is every time I think it's almost like the more you learn about the markets, the more you realize how much there is to learn about the markets. And it's almost like this weird curve where when you first get into trading, you think it's not that hard, or like it's kind of a simple process. And then the second you actually, the more you learn, the more you realize you don't know. In terms of the trading style and approach, it hasn't really changed. I'm predominantly a swing trader. I trade with a good bit of a fundamental analysis approach. So I typically do focus on, what's happening in the macro, looking at the economic statistics, taking a look at, what central banks are around the world doing. That's kind of my baseline. And the easiest way I like to explain kind of my trading approach is in terms of finding a direction in the market, trying to, kind of be bullish or bearish on something. What I start with personally is the fundamental analysis side, which I know, some people love fundamentals, some people don't use them. I've found a lot of clarity in the markets through them. And, whatever leads you to finding that clarity and simplistic approach in your strategy or trading, I think is important. But for me, it really has been the fundamentals. Really, directional bias for me is easiest when I understand what is really driving prices in the markets. Is the Federal Reserve expected to cut interest rates? And how is the economy holding up according to some of the key metrics that people are looking at, like for example, like the labor market, or taking a look at GDP growth and company earnings and things like that. So I really like finding direction through fundamentals. And then I use a really simple, like textbook technical analysis approach for my entries and exits, primarily on like the 4-hour or daily chart. And I'm trading, basically with trends. I'm looking for markets that are trending well one way or the other. And as long as the fundamentals kind of marry up with them, I'm looking for break and retest entry points, and I have a trailing stop method that allows me to try and let winners run, and I cut my losses pretty quick. So I'm a pretty standard trend follower, with the twist being I like to kind of put a filter of fundamental analysis over whatever I'm doing. And that's really been a successful approach for me. And again, with fundamentals, that is a very deep rabbit hole. So when I say I learn something about the economy, it only leads me to being like, oh, there's a lot of stuff I need to learn more about for me to really build out my knowledge base. But I think that that clarity from having that simplistic approach has been very key for me. And one thing I'll add to that, Etienne, I think that a lot of people, when they hear about fundamental analysis, they're like, that is just so much, there's so much theoretical there. There's so much like, you're looking at like, oh, the jobs data, but how do you know if that's important? Or should I be paying attention to the CPI numbers, inflation statistics? And there's so many different things that it can almost be overwhelming. And I think as we jumped on the call here just before, I was mentioning that what my company kind of does is we build tools that try to bridge that overwhelming gap to a simplistic approach. So we build like software, like visualization tools for traders trying to better understand macroeconomics and how they impact the markets. So we build charts for like GDP statistics and things like that. But long story short, in my personal trading, how that's been helpful is that our system also will categorically assign bullish or bearish kind of signals to each metric, which helps to take something that is kind of theoretical, fundamentals, which is a lot of like spinning in your head different thoughts, and tries to place them into a rubric of sorts where we can kind of get like a scoring and systematic approach. So I'd actually say that my approach to fundamentals is my best approach to trying to make it into a systematic or mechanical system to a degree, from something that is very discretionary. That's the biggest kind of pushback on fundamentals that I often get, is like it's kind of, when I'm looking for something to actually like trade, I'm looking for things to align very well. So I'll give you a quick example. In 2022, the US dollar was like going up and up and up for like the entire year. Some traders might remember. And it was because inflation was rising, and the Federal Reserve, to combat that rising inflation, was hiking their interest rates like every single meeting. And when we looked at the U.S. economic statistics relative to many other developed countries and you know, banks like the ECB, you know, the UK, right? All these places, they were seeing inflation, but they were not seeing as nearly as strong economic data. So they're kind of bridged this or built this very clear FX trend. And it was basically, you know, US dollar strength, because almost all of the signals that we look for, CPI, NFP, you know, all of the job statistics that we were honed in on in our software, the you know, PMI statistics and retail sales, they largely favored the US over other places. And so the dollar was strengthening off of the back of that and the Fed hiking rates. And so to your point about, you know, everything green or everything red, we actually use everything blue or everything red. And in this case, it was like everything blue for the US dollar on our scanner, our visualization tool. And so that actually triggered a lot of like ideas, a lot of trade ideas for dollar bullishness that year. And it really was one of my better plays that year, was staying long, you know, things like dollar yen, and short things like euro dollar, of course, still playing on that dollar strength. But I think that, to your point about, you know, what if you get conflicting fundamental views, and that is really important, because I think that's where a lot of people go wrong with fundamentals, is in their head they're trying to balance like, well, which one do I listen to? And then it just becomes like a self-fulfilling bias of like what you want to hear. And for our system, the systematic approach, which we call it the Edge Finder. I haven't mentioned the name. The Edge Finder is the software that we use. It's you know, fun kind of name. The idea is like finding edge through economic data. And so the concept there is when they have mixed signals, when you get something where it's like, let's say, you know, CPI indicates high levels of inflation, and that could be strong for the currency because the central bank will hike rates. But at the same time, GDP numbers are very weak, which does the opposite effect. How that would actually come out, long story short, was the Edge Finder would basically assign like a neutral reading. So it would say we don't have a bullish view, we don't have a bearish view, because these two things kind of offset each other. So sometimes you get really strong jobs data and really weak GDP numbers. And in that case, there's not really a bias there. There's not really a trade for me. So I hope that makes sense. But yeah, so we're looking for things where signals very greatly align and we get a pretty clear bullish or bearish signal. And then from there, looking to apply simple textbook technical analysis and you know, risk management, all that good stuff. I mentioned earlier that I typically look at the 4-hour and the daily chart as the primary kind of price gauges for me. So if we think of just like really standard cookie cutter technical analysis, let's just say you have an uptrend with higher lows and higher highs. I'm looking to get in on that you know, higher low. Let's say I do get in and it breaks through the highs, forms a new higher high. At that point, I just trail my stop loss behind the lower low or the higher low, and then vice versa. So every time we break through new highs, if we're in an uptrend, or break through new lows, I'm looking to trail my stop loss behind the relative, you know, low or high, depending if I'm long or short, and just try to, again, let it go as long as possible. The way I think about it, Etienne, is like, if I am in something and if I'm really right about something, like fundamentally, like let's say I think gold is going to really make a move higher in 2025. Let's just say that as an idea. And if I'm right about that idea, I don't want to be right for, you know, a couple percent move or whatever that would be in pips if you're trading the CFD version. You know, I want to capture as much of that move as possible. If you had used a trailing stop, which this was for me this year, 2024, some of my biggest trades came from some gold longs that I took in February and March, where you had just a really, you know, one directional up move on gold for a couple months there. That allowed me to really get some of those beautiful risk reward trades. That being said, though, the criticism of trailing stops is so real, because there's also times where, the market's chopping around and nothing's following through. So I kind of have to, I think of it as like going fishing. Like if you're going to go fishing, I'm not a fisherman, but I know this analogy kind of worked. So the idea basically being, if you go fishing, you know that most of the time you're not going to catch the big one. You might catch a little something here and there. You might catch nothing. And every once in a while you catch the really big one. And it's kind of like the whole point of going fishing. My trading system in terms of the mechanical aspects of price action, I would say is as simple as that, is really just looking for the big ones that come infrequently and being patient enough to survive drawdowns and slow periods in between. The trading capital that I have has come from a number of different things. I've grown it over time. I've been trading since since like 2015, but I became profitable like somewhere around like 2017, 2018. And since then have just kind of consistently worked to grow the capital and compound it. And I've really grown a good bit of it from the trading itself. That being said, I wouldn't be fully honest if I didn't say a lot of it has come from, my career. I do podcast work for brokerages. I have a YouTube channel. I have a software business. So a lot of the capital that I do have transparently has come from the work that I have done in my kind of career in the trading space. I don't really sell a lot of education, but I do offer, my background is in software engineering. So before I ever really got into all this stuff, I also was a software engineer by trade. So I had a software job before this. And then, before that, I had started some businesses when I was growing up. I had a landscaping business where I was cutting, a bunch of yards for all around my neighborhood. So I had some capital saved up before I ever got into trading. And I do think that is a unique story because not everybody does. A lot of people, when they get into trading, they don't have any capital. But by the time I got into trading, I had started a couple businesses that had done decently well, and I had some capital, but I was actually very afraid to lose it. When I first got into trading, I was really afraid to lose the money I'd worked so hard to get in other business ventures. I was big into cutting grass, as I mentioned. I also started a business where I was basically buying and selling, like tractors and four-wheelers off of like Craigslist and like Facebook Marketplace, which I've talked about this story on my channel a bunch, but it was a great way to build a lot of capital because there was a period of time before all the 2020 craziness where there was just a plethora, like in my local area in the South in the US, there was this interesting trade that my dad and I would make, and not like market trade, but we would go out to further out places, like more rural areas, and we would buy equipment from people who were just trying to get rid of it, who didn't have like a big local market. And then we'd bring it back to where I'm from, which is Atlanta, where there's a huge market for this stuff. So we could go buy, ATVs, Polarises, tractors in places where they didn't have an audience to buy it. And it was almost like a market inefficiency. It's kind of like you could go arbitrage it and sell it for fair value in the city. And that actually was a big component to how I had initial trading capital that was not small. But again, I worked so hard to get that when I approached trading, I was like, I'm not blowing this money. And so I have had accounts that have done really poorly, but I've never actually fully blown an account because I was always so careful, scared to lose that money I worked so hard to make. So if that makes sense. I get a lot of slack for that on my channel and my content and stuff like that. Is I'm a really big proponent of just going slow. Like I'm not interested in big gains, fancy gains. I'm all about like slow and steady, because I'm sure you know this too. It's like if you want to do this for the long term and you want to have like a sane existence, you've got to risk small, because if you're risking aggressively, if you're trading like a lunatic, it's only a matter of time before you're back to square one and you've blown accounts, and that's just not a sustainable approach. It's almost like I listened to you may remember, and you've probably interviewed him at some point or another, Rob Booker. Do you remember or know Rob Booker? Yeah, Rob Booker. So he had something that I listened to back in my college dorm that like completely changed my trading life, which was he was such a big proponent of small positions. And he's had this simple message for a long time. He's like, everybody is so, they complain so much when I say go slow and steady and make 1% to 2% per month or whatever. But he always asks the audience, but how much are you making right now? And if the answer is, for most people who are, inevitably, sadly, losing traders, the answer is they're losing, multiple percent per month, if not more. And so he was pointing out the idea as basically, instead of be angry that I'm mentioning 1% to 2%, is making 1% to 2% better than losing 5% to 10% every month? And the answer is obviously yes, but most people don't want to accept that. So I know it's not the popular answer. It doesn't sell courses. It's not exciting. It's not flashy, but going for slow and steady returns is the only way that I know I can do this long term. I can compound money over time. And taking the tortoise approach and the turtle and the hare story that we all grew up learning, is really ultimately the only way I know to win the race. I mentioned that I had a background in software engineering. So when I got into trading, and I was also nervous to lose that money that I'd worked so hard to make from my other, ventures, I actually really embraced, I think I loaded up like a $500 account or something like that with a broker, and started trading like 0.01 lots, and had some wins, had some losses. And I realized very quickly, like, okay, this is way harder than I thought it was. And I don't want to like take another live trade until I do some testing. And that led me down just a campaign of back testing. And I think that the truth is, most traders approach the markets with an interest in making money, which is totally understandable. Everybody wants to make more money, and everybody hears about trading through somebody who's made a bunch of money trading. Like, that's an understandable, and it would be kind of gaslighting for me to say, like, that's a crazy thing to come to trading because you want to make money. But I also, kind of was just enamored by the markets. I was interested in them. Like, and I think that is very important for becoming profitable. So for me, once I realized like, oh, this is actually kind of hard, I just explored markets like without even trading, just like watching people's videos, listening to things. And I started back testing a lot. And I started very quickly finding, I could program stuff in MetaTrader, which I know you're familiar with, like creating bots and creating systems. And I'm sure this will resonate with you too. Then what I found very quickly with that is I picked up how to program that, because again, that's what I went to school for. So I'm learning how to program in here, and I'm running through data, back testing stuff. And I realized really quickly, wait a second, this is really hard. Like, it's really hard to find an easy edge, and all these videos on how to, make all this money in the markets, they're not real. They're like, I'm testing these systems and they are far, harder than what meets the eye. So I think with my software approach, programming, trading robots and things like that, I realized very quickly that trading is difficult, that building or finding an edge in the market is difficult. And what I kept finding, and this was at the same time I was listening to Rob Booker every day. He was playing around with expert advisors as well and building stuff. And what I kept hearing him say was, just accept making $1 and keeping it and trying to make a small amount of money and just doing that consistently. I heard that over and over, and then I started seeing it in my back testing. I was like, wait, I keep seeing this thing blow up in the back test if I try and go too fast. But if I go slow, if I trade with small size and conservatively, some of these systems are actually working. They're making more than they're losing, and they're generating capital over time. But the variable there that's kind of frustrating is the time part, right? If you can manage risk and go slow, you can make good money over the longer term. And so that was where it kind of clicked for me. I realized through backtesting and through listening to, Rob's like monologues, that small risk is kind of the secret to surviving the drawdown, right? That was the big secret, if you will, is like, you have to be able to survive drawdown. That's the only way to trading profitability. So that was my big breakthrough, was stop focusing on, reward and start just focusing on risk, and the rest takes care of itself. I didn't want to believe it, if that makes sense, with the whole, I've got to risk small, because it's so not fun. I remember being so bummed out because I was like, even with the capital that I had built up, I was like, I'm still not going to be able to do this for a living. Like, if I'm going for 1% to 2%, I think at the time I may have had like I don't know, maybe $40,000 or $50,000 saved up from all my stuff that I had done. I was like, this is still not going to, in Atlanta, Georgia, rent is expensive, right? So I'm sitting there, I'm like, this is not going to really pay the bills handsomely. I'm not gonna look like those super wealthy influencers I'm seeing in the trading space anytime soon with this kind of return. So I think at first, in terms of a mindset shift, it was gradual. I actually remember when I sort of came to the realization that, okay, the only way to do this is go slow and make slow and steady money. I remember stepping away from trading for a few weeks and just being like, okay, I've uncovered the truth about this stuff and it's not very exciting. So I don't know if this is right for me. But then I continued to find myself like watching videos and learning about the markets and like exploring things. So I realized maybe this doesn't need to be my primary immediate like savior income source, but I do really like the markets. And so I realized like the only way forward was to accept that this is a long-term game and only push forward if you actually genuinely love learning about the markets. If you don't, I say it all the time, I don't think you can become a profitable trader and stay consistent if you don't actually have a love for learning about markets. I really think that is a need, not a, this is not a side hustle. This is your primary focus if you want to get good at it.
A big part of what I'd studied and learned was this, well, how do we identify superstars that aren't superstars yet? How do we accelerate the rate of development for individuals to maximize that development trajectory in terms of ability across time? How do we inject our levels of intensity, motivation, and confidence into the rest of our team? I mean, but up until this point, of course, for me, it was just optimistic theories, copy pasting from experiences, things I've seen, and theory from what I'd studied. But long and short, that after that dinner, Alf basically, we riffed for hours on what we could do. He told me where he perceived the banks were going wrong, and like almost any organization I see, they're leaking progress everywhere. And he basically gave me the keys and was like, align this organization, it was Mandara Capital at the time, with everything we can to stack probability in the favor of our success. And that's what I did. And it turned out to be a good decision. Like in less than 3 years, we went from sort of zero to trading more barrels of oil a day than BP, Glencore, Shell. And it was a real success story. Alf ended up on a beach in Singapore, and I was in a three-man management team in an acting CEO role running that company, and it was an incredible opportunity for me. And I fell head over heels in love with trading and investing because, number one, you're working with some of the smartest, hardest working individuals on the planet. And number two, you can measure everything. So as the performance scientist in me, it was just perfect. And concurrent to all that, I've been used as like a sledgehammer in elite sports. I'm lucky I work with some of the best sports teams and athletes in the world, and my role is to go in and just almost listen to what they're trying to achieve, stand back, watch, then hold the mirror out, and again hit them with a sledgehammer in terms of where they're leaking progress and what they can do about it. There's two key aspects to performance, right? You've got the technical aspect, which is skill. So of course the context is different between, say, an elite athlete and an elite trader. However, the process of designing world-class training to acquire world-class skill in the individual is exactly the same. So as far as I'm concerned, like the principles that drive elite technical ability, whether you're a trader, investor, special forces operator, they're exactly the same. The other aspect, of course, is the psychological bit. And everyone talks a lot about psychology, but they don't really... I mean, sports teams are the worst, mate. I go into these sports teams, they're like, oh, it's all about mindset, it's all this, it's all that. And then I'm like, okay, well, show me what you're doing about it. Because when they talk about the technical aspects or the physical aspects, I see the training, I see them in the gym, I see them doing the back squat, the bench press. I'm like, well, you're talking about psychology all the time. Like, show me what you do. And there's nothing. And that's a big part of what my role is. And like, whether you're a trader, whether you're an athlete, and there's three key psychological skills you're going to have to master if you're going to perform, let alone perform at the upper limits of what you're capable of. And the first one is that, when it's time to compete or time to train, you must be able to flick the switch. I describe it as the on switch. So you need to be able to put out on full power in terms of your intention and energy. And you need to be able to channel that focus and attention and energy on the task at hand as if it were like, think charged fire hose, but through the eye of a needle. On the task at hand, whether that's the SF operator taking the shot, whether it's the trader, focusing on his risk, his position, what's going on in the market, listening to brokers. He's just immersed in that. He's not thinking about what he's going to have for dinner. He's not thinking about something that happened on the weekend. He's not thinking about what went on with his partner. He's here, there, in the present, accessing everything. And the reason that's so important, by the way, is that when we flick that on switch and access what I would refer to as blue head performance state, you might hear it referred to as a flow state, your brain releases 6 neurochemicals that drive all elite performance. So we're talking dopamine, serotonin, anandamide, oxytocin, endorphins, norepinephrine. And these neurochemicals do 2 things. First is they unlock your psychological firepower. They give you complete access to your confidence, motivation, resilience that we all know drives elite performance. And secondly, this is really important. All your skills are stored in your brain as mental structures. They're like complex lattice works of information, like a spider's webs. And I can literally scan an advanced trader's brain versus a novice, and you can get them to trade, and you can see the neurons fire, and you can see the advanced trader will be the one who has the most sophisticated, complex mental structures. It'll be like a big, thick, messy spider's web, something like disgusting out of a Harry Potter movie. And the novice will be some tiny little weak neural pathway, like a little baby spider's web. And ultimately in elite performance, the winner or the person who performs the best will be the one who has the most sophisticated mental structures. So the most sophisticated skills. And these are very real things you can see in your brain. But obviously because we can't see them, like we can see like a set of biceps or something like that, it's not so obvious. But when you're in that blue head state, we've got something in our brain called a critical faculty barrier, and it's wide open. And you effectively gain complete access to all your skills. So everything you've ever done, every moment of excellence you've ever had is a reflection of what you're capable of. The challenge will be, can you flick the switch when it's time and open that critical faculty barrier and access the skill that you have? So that's challenge 1, and that's skill 1 I need to develop with the elite performers I work with. And it doesn't matter what you are, that skill is that skill, whether you're, again, world champion, a boxer or super trader. The second aspect is what I'd refer to as the control switch, because there you are up in blue head, everything's going well, then all of a sudden you get an almighty kick in the pants, and no one gets to avoid this. So that could be some market news breaking, it could just be some tech failure, it could be like some personal shit with a partner or just life stress. Or, in sport, it could be the referee giving you a bad decision, so on and so forth, the risk manager giving you shit, whatever, like 1,000,001 things. But what that can do is it can send us what I call into red head. So in this state, we're still putting out full power. We're still concentrating on the task at hand. But now there's some negative emotion attached to it. So frustration, anxiety, anger, irritability. And what happens there is our blood flow switches from our conscious and unconscious brain, which is unconscious, I've just talked about, is the seat of where all that elite performance flows from. And we switch that blood flow to our emotional brain. And we switch out the big 6 neurochemicals for the 3 stress hormones, cortisol, noradrenaline, and adrenaline. And that basically triggers this fight or flight mentality. And what happens is 2 things there. The first thing that is catastrophic for performance is that critical faculty barrier I talked about, bang, slams shut. So temporarily you lose access to all your skill that you've spent 20, 30 years developing. So when you see the athlete choke or the golfer choke on the 18th hole, you see the super trader or top investor make some terrible decision. It's not that they've technically suddenly just got shit and forgot how to make a good trade or stick to their principles or hit swing a golf club or take a penalty. It's that temporarily they've become a novice again because they've lost access to that ability that's scored in their unconscious mind. So that's the second skill. We need to build control switches so that, number one, we want to reduce the probability of going in there, but like life's life, like everyone's going in there no matter what. So we need to also then train people to become aware, like, oh shit, I'm going into here, because awareness is the first step in terms of flicking the switch back to blue head. But then thirdly, we need to develop routines and capabilities and that skill to be able to be like, oh shit, this has happened, bang, but I'm conscious of it. I've got a routine. I'm going to control my thoughts and actions, which are going to deduce my behaviors, my thoughts, my feelings, and bang, I'm back in blue head and performing again. And then last but not least, mate, the other side, of course, of training and competing is rest and recovery. So the third skill I want from a psychological perspective, again, whatever the domain, is that when it's time, well, the other side of competing and training is that recovery, restoration. So as soon as you finish training and competing, I want you to bang, flick the off switch and I want you to stop expending energy, stop expending attention, and I want you to feel good. And this is where we sharpen the axe, because the training, the competition, the trading all day, the experiences you have there are the catalyst. The stress you get there is a catalyst for your brain and body to adapt to a superior level. But that adaptation only takes place in what I would call that greenhead state, where we're taking time to rest, and obviously on a physical perspective, that's sleep, nutrition, hydration, but emotionally, that's emotional detachment from the activity. Mentally, it's switching focus between left, right hemisphere, and for lots of people, the spiritual aspect. The first step before you start learning is actually making sure you're pursuing the right goals in the first place. Because when you study outlier performers, there's one mechanism they all align with more than anything else. And in psychology, it's what we call self-concordance. It's born out of what we call self-determination theory. And the basic premise is this: you have a sweet spot, and to excel, the goals that you pursue and the way that you pursue them must align with the qualities that make you unique. So this starts with, just like a baseball bat has a location at which the ball rebounds at a greater velocity if struck at any other point, so do you. So before we start training, we need to make sure you're pursuing goals you're optimized to pursue in the first place. So your sweet spot exists at the intersection of three things: your strengths, the things that come naturally to you; your interests, the things you're instinctually drawn to; and your values, the things that are most important to you. And if you don't pursue goals that align with these traits, then it's very hard for you to access that blue head state. Because the secret behind concordant goals is they tie in what we call your dopaminergic incentive reward system. And this is the evolutionary mechanism that compels you to move forward confidently and assertively in the face of, overwhelming odds. And it's effectively what triggers those big 6 neurochemicals to come online in the right sequence, right time. So it's not that people aren't born with or don't have the confidence, motivation, resilience to excel. That we all know that's what drives elite performance across time, right? Exhibiting those behaviors and those emotions. But the key thing is to make sure that you pursue goals that enables you to activate that in the first place. There aren't people that don't have that part of their brain. There are just people pursuing goals that fail to activate those traits. So we need to, when it comes to your trading, it's really important to identify what are my technical strengths. So just like if we were going to take you to an Olympics, we might look at your physical anthropometry and be like, okay, you've got a hip to knee ratio that's like this, and you've got lungs the size of an ocean. We're going to stick you on the rowing machine, mate, because you're going to be able to generate so much force and propel so much forward movement. You've got a high probability of winning a gold medal. And we don't tend to take that approach in the knowledge working world, even though it's exactly the same as sport. But just like an athlete has a physical anthropometry, and the anthropometry required to be a heavyweight boxer is going to be very different from a jockey, it's exactly the same in the cognitive realm. So there's certain styles of trading that are going to require certain cognitive strengths. So it's really important you understand, and you can do a bunch of cognitive test batteries that will indicate what are your cognitive strengths and where are they an advantage in terms of what specific styles of trading. Because trading and investing is broad, right? It's a bit like saying I want to play sport. There's so many different styles. So that's why the strengths are so important. You need to understand what they are. Also, the psychological piece, we also have, we send some links out to in terms of psychometric profiling, but you have personality strengths and weaknesses, and these are hardware features, right? So we need to get them right. And almost every trader I work with who's maybe struggling, one of the first things I'll get them to do is to do one of these personality profiles, and I'll look at the weaknesses associated with that profile, and it's hilarious. It's uncanny how the errors you're seeing in their trading always directly link back to their personality strengths, their hardware glitches, and where there's just not alignment because something's changed, and now the way they're trading, whether that's in the market, in the setup, with tech, but now it's actually causing a weakness that they've had to become a potential threat, and it's affecting their trading. But it helps us zero in and fix that and apply constraints. But the reason, of course, pursuing goals that leverage your personality and cognitive strengths are so important is they're going to dictate your responsiveness to training. So if you've got more strengths than me, then every 2 hours of trading time we spend trading, and you're going to experience 2 breakthrough moments and I'm going to experience 1. A year from now, you're going to be so far ahead of me, I'm never catching you up. So that's why strengths are so important. And they're going to dictate the role or the style of trading you engage in. So you need to get clear on who you are and where you're optimized first there. The next bit would be the interests. So interests are the things we're instinctually drawn to. And the reason interests are so important are that, quite well, you don't have to motivate a child to play. If you're sincerely interested in oil derivatives contracts, it's not hard to study them all weekend, right? So it's like within the trading space, are there areas you're specifically interested in? Like, I just like the tech. I just like the fundamentals of this market. I just love US equities. I just love, whatever it might be, right? You'll know what that is. But when you pursue interests, you are effectively able to, I would say, almost outstruggle the rest, because it gives you staying power. They're like an anesthetic to the unrelenting immersion required to excel in a single specific area. So it's obviously a massive edge. The third aspect, of course, is your values. So the things that are most important to you. And your values will dictate the intensity you bring and the odds you're prepared to face. You bring the blood, sweat, and tears to achieve all your goals in trading because they fulfill your values. So you need to work out, well, what is important to me in terms of my career? And, that will probably dictate where you trade. So whether you're a retail guy at home, because you don't want that big corporate pinstripe suits, the skyscraper, bureaucratic, political structure. Other people love that. If that's what's important to them, a high base salary, lower bonus, but go work at an investment bank in London or New York. If you want true meritocracy and the opportunity to compete, to try things out real fast, then maybe you're going to go the retail end. And there's obviously 1,000,001 places in the middle there, but your values will genuinely dictate the organization you work for. That's where most people go wrong. It's that reasoning by analogy. They look at something and they see, especially in trading, right? You see the movie version of trading and it's like, okay, cool. It's sexy, it's exciting. And then you copy paste someone else's recipe. You cannot copy paste your way to elite performance. You need to break your own problems down to their own basic elements and then reassemble them from the ground up. And that starts with understanding who you are and where you're optimized, because that will dictate the goals you pursue and the way you pursue them. And this is a big sort of, I guess in society, we're often told this, you can be anything you want to be if you put your mind to it. And it's bullshit. You can't. You can get better at anything, but you can't excel at anything. And unfortunately, if you're not at the top end in trading, you're probably not even making money, let alone making a lot of money. We know what that distribution curve looks like in terms of success and profitability. So you need to get this right. And it's this, instead of, you can be anything you want to be, we need to switch our transition and focus towards that you can be a hell of a lot more of who you already are. It starts with working that out. So that bit's the most important bit, right? Get the hardware right. Once we've got the hardware optimized, we need to then focus on the software. And people get this wrong. There were plenty of people who had the same level of concordance or were performing from their sweet spot as, say, Cristiano Ronaldo and Elon Musk or Paul Tudor Jones, that didn't excel, and to the extent they did at least. And it's because they failed to get this skill acquisition bit right. So this acquiring skill. And, I talked earlier about how skills are stored in your brain as advanced mental structures. Right? The sole purpose of training is to create advanced mental structures. If we were to play the mental arithmetic game now, and I go 2 times 2, bang, hopefully the number 4 just popped into your head. Okay, it's unconscious, automatic, there's no thinking. That's elite performance, right? Well, when you watch a top trader make a decision in split seconds, that's what's happening to them, because their mental structures for that complex decision are as sophisticated proportionately to mine and yours for the 2 times table. So if we were to carry on and play this mental arithmetic game, the winner between you and I and everyone listening would be the individual with the most advanced mental structures for mental arithmetic. The first misconception we need to dispel when it comes to skill is 10,000 hours rule. I hate it. It's horrible. It's one of the problems with journalists writing books on human performance. They sort of cherry pick interested, like they do a superficial skim of the research and then cherry pick findings that will make it for a great chapter title or so on and so forth. And that study with 10,000 hours was based on one set of violinists. There were 14 participants. One actually did it in 2,700 hours. Another one took 28,000 hours. In the meantime was actually about 11,500 hours. So what we would do in human performance, by the way, is identify the outlier. So the individual that did it in 2,700. And the question we ask is, what were the causal mechanisms that enabled that individual to perform at a much higher level with much less training dose. And the fact is we obviously, then we break down, examine those conditions. And of course, that's what I'm here to talk to you about today. One of them, of course, is that concordance piece. The next bit is skill acquisition piece. And when it comes to skill acquisition, it's not the time spent training that matters most. It's the time spent training under specific conditions. And there are 7. I won't go into them all today, but I think there's 2 or 3 that are probably super important. And first and foremost, again, is you need to understand what it takes to win in your style of trading. And then you need to proportionately focus your effort there. So, for example, in tennis, 86% of points are won through the first serve, the return serve, and the second serve. Successful tennis players will proportionately focus their training there. And one of the exercises I encourage any trader to engage in, and when I'm screening any trader and potentially hiring or going to work with, there's sort of 5 key questions I'd encourage them to answer. And the first one would be like, I want to understand your decision-making process for placing a trade, whether you place one a year or one every 10 minutes. And that's, how do you decide what to buy? How do you decide when you're going to buy it? How do you decide how much you're going to buy? When do you decide you're going to sell for a profit? Or how do you decide you're going to sell for a profit? And how do you decide you're going to sell for a loss? And if you can't answer those questions to me, you don't have a clear strategy. And a world-class trader for me will be able to go bang, 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 bang. And if you can't, I recommend you sit down and you start writing out those for the various styles of trading you engage in. The second thing I think is really important is, look, these advanced mental structures, you know, they have to come from you. Coach can explain it to you, but they can't understand it for you. So when you're forced to summon your own solutions, the practice literally changes you. And this is where learning by doing comes in, even if it's with small size or demo accounts. But you have to, as quickly as possible, go from theory to practice, like start trading, even if it's with small size. And then reflect and learn on what you're learning. You need to think, do, produce, not memorize, recite, repeat, okay? Because that doesn't change your mental structures. That just goes in your short-term memory and out the other side. And that's why you don't remember shit from all that stuff you studied at school, because it goes in there and out the other, because it's just rote learning. And so many traders just engage in that same style of learning. So we need to switch that up. We want to create simplified simulations of the real thing and do it as quickly as possible. And when you start to have those sparks or those breakthroughs, or you're in the shower that night or walking the dog the next morning, you're like, bang! What's actually going on there in your brain is you're literally laying down a neural pathway that's advancing and sophisticating your mental structures. So that's super important. And I'd say the next thing I'd focus on is like, look, it's your future, your career, and it's your responsibility. Therefore, you take the lead in it all. I'm a partner in a hedge fund, a derivatives trading house, and a wagering syndicate. And the first message we say to everyone joining any of these organizations is that you know, that's the deal. We're all assets in your environment. We're going to give you everything, but it's on you. You have to drive your own performance. And if you can't do that, you need to come back and question whether you're truly concordant with the goal you're going to pursue. Because, look, performance is a cruel mistress. And the thing I love about trading, but the thing that makes it brutal, is that the winner takes it all. And if you're going to play the game, you need to be all in, or you at least need to be prepared to go all in. And fundamentally, taking complete ownership for your development is a fundamental aspect there. I think the next thing that's really important in the skill side of things is you need to identify specifically where your skills are breaking down, okay? And then you need to design training or apply constraints that address that specific area that your skills are breaking down. This is all about understanding your problems so much that the solutions practically fall in your lap, okay? And if you can do that, that means you can be incredibly effective again with cranking your development trajectory nice and steep. And again, like back to a tennis analogy, if you're losing points or losing tennis matches because your second serve is weak, then practicing your first serve and return serve all day isn't going to make you a better tennis player. So you've got to be really strategic, and this is all about being as effective as you can rather than just being efficient and doing lots of stuff. It's about doing the right stuff, the stuff that really moves the needle for you. Practice makes perfect. Like, that ability to flick the on switch is a skill. And again, like any skill, it can be developed with the right strategy and effort. And the right strategy is what we just talked about. Number one, you need to make sure your goals are concordant, because if you're not got concordant goals, forget it. You're never going to be able to switch on, and you shouldn't be, because you're not prepared. If you shouldn't feel confident and motivated to do things if you're not prepared to do them. So it starts off with making sure you pick goals that you have an edge and you have a good chance of succeeding at. The second aspect, it would be what we've then just talked about in terms of technical preparation. If you're not technically prepared, if you don't have the capacity in terms of your skill to meet the demands that are going to be imposed on you in the market, then again, your brain's not going to give you those good chemicals, because it's going to protect you, because you're going to get your ass handed to you. And that's why we talk a lot about like visualization, meditation, affirmations, kale smoothies, Whoop bands, all this shit. And, I'm not like, yeah, fine, it's good, but it's only good, and that only comes, and I only, like the people I work with, I'm not talking about any of that shit until we're crystal clear on knowing exactly what your edge are in terms of your strengths, interests, and values, and we've designed high quality training, and you're engaging in it, where we know what it takes to win. We've designed simplified simulations. You're taking ownership of it. We're identifying where you're breaking down. We're then tweaking how we train. We're putting constraints in place to mitigate your weaknesses. We're structuring the way you trade so it accentuates your strengths. Once we're doing all that, and if you're doing the concordance piece and the training piece, the skill acquisition piece well, flicking the switch, that on switch when it's time to train and compete, should come very natural to you. And it's quite, and almost the opposite. If you haven't done those two things well, you don't have the capacity to meet your perceptions of the threats imposed on you, then you're gonna have stress, and it's gonna throw you in redhead, and you're not gonna be able to access what you truly are capable of. Okay. However, every now and then, and this is an important point, when I talk about capacity and demands, what we're actually talking about is your perceptions of your own capacity and your perceptions of the demands imposed on you. So sometimes there can be glitches there. And when we look at the human brain and how it works, at any point in time, we've got 3 million pieces of information coming into our perceptual awareness. Our brain can focus on about 134 bits. And we have these series of filters that act like you can call it a mindset. Mindset is just a set of beliefs in your mind. But what they do is they filter that information, they distill it down. And, occasionally we have significant emotional experiences that can shift our perceptions of our own potential in negative ways. Whether it's a terrible drawdown or something happening in our personal life. And we can temporarily sort of reduce not temporarily, we can change, that can change the way we perceive what we're capable of. Okay. And that's just a perception. It's not a reality thing. So very occasionally a bit of the work I do, and it is about, okay, well, let's, effectively the brain and those filters are a bunch of sloppy, wet code. And, part of the role would be to look, where are there glitches? Have we got limiting beliefs here? Have we got inaccurate perceptions of what we're capable of? Are we overestimating? Are we putting the market and people we're competing against on pedestals here? Do we need to balance that out? So, it's almost like removing phobias. It's like, a bad drawdown or bad trading experience can maybe be like a kid getting bit by a dog, and then be like, all dogs are bad. And then we code that into our neurology. And then suddenly every time we see a dog, we're like, and we go into redhead and panic and lose access to all our skill and then make terrible decisions. And it sort of reaffirms that narrative. And, my role there would be to identify that, okay, that's where the glitch is. Let's go in and let's fix the bug in that code. So we can perceive things from a fully integrated perspective, because dogs aren't just evil and scary and bad. Yeah, they can be that, just like the market can be that. But the dog's basically a metaphor for the market there, in terms of it's lots of things. It's the gift, it's the curse, it's everything. And you need to be fully conscious of them all. So that's where there can be some surgery required at times from a psychological perspective. And then, of course, there are some really good psychological skills training you can do. And again, I'll put some links up for you in the show notes, mate. But we've got some guided performance routines, and these are the sort of routines or conversations that I would have with a super trader, the athlete before his world title fight, if they're going into redhead. So it's like a guided performance routine to bring you back to blue. They can be really useful. There's also emotional control training, similar to meditation, but a bit more performance based than hippie headspacey type stuff. But doing and engaging in these activities are a no-brainer for anyone who's a trader. I mean, some of the research is just nuts. Like even 10 minutes of emotional control training has been shown to reduce your susceptibility to cognitive biases by up to 60-70%, which is just fucking nuts, right? Like imagine if there was a pill that could do that, I'd be a trillionaire. There are tools out there, and we'll put some links up to them that people can try out. Visualization is another good one, but again, it's very often not done well. But we'll put some links up, and people can try that out, because that can certainly help amplify and grease up that on switch for when it is time to deliver and deliver all your ability and talent.
I hope you got some good value out of this. Again, these are really powerful advice, I believe. Let me know in the comment section below which one you relate to the most. Which advice was the most impactful to you? Let me know in the comment section below. Let me know your thoughts as always. Other people will read your comments, and it's going to be a good place to add these small clips of good information in trading, and people can read back and of course see how you are impacted by it. If you want to see more of these one-hour masterclasses, the link is going to be over here on the screen. There's plenty more. We've done a lot of them in the past. The full interviews are going to be linked in the description below, and we'll catch you back here in the next video pretty soon.